One by one, they're all removing the barrier. These are major barriers. That's number one. Number two, little by little, we're all witnessing firsthand the door to the golden age opening. Listen to what they're doing. Listen, FDIC, this is what the article says. FDIC says banks can engage in crypto. You know, these companies like Ripple, Hedera, all of these Bankcoin companies were drooling at the mouth when they heard that. This is what it says, the first sentence. So there's been multiple, one by one. Another U.S. bank regulator has announced that banks do not need. You know, the banks love that. They don't want to have to report to anyone. They don't want to have to ask anyone. But it says, has announced that banks do not need to receive advance permission to engage in crypto-related activities. Really? Why now? Come on, folks, you know this. Why now? They know what's coming. Now, if you've been keeping up with all the bank information, they were told from the top. They were told from the BIS, other large financial industry leaders, you need this technology. And if you don't have it, and this is close to being verbatim to what they said, if you do not adopt these technologies, you will be left behind. And they've said that multiple times over the last year, year and a half. So now it looks like what they're doing is, because there's a lot of businesses and a lot of banks that they know of the technology, but they haven't, how can I say, they haven't sped up the process of adopting the technologies. They haven't made the necessary moves to come into alignment with the new financial system. They haven't done it. And now you can see, right, we've witnessed this, all of these top institutions putting pressure on them. You had the pressure from the BIS. That's one example. You had the pressure coming recently from SWIFT itself. They let people know, as far as the aspect that they're interested in, hey, do this now or you're going to be penalized. Really? Then that's interesting also. Think about this strategically. SWIFT. Let me just go off on this path here, but you'll see why it's relevant. I beg your pardon. Ripple put out that statement recently where they said they want to compete with SWIFT. Nothing newer than what they said in the past, but now it's different because now they can actually do it. Now they're unleashed. Ripple wants to compete with SWIFT. SWIFT needs to maintain a good relationship with those banks that they have in order to keep them, because these alternative systems are better. Everyone knows it. It's not a secret. SWIFT puts pressure on those banks, which the banks are saying, well, read the articles. This is what they're saying. Well, they're worried about cost. They're worried about training their employees, etc. They got a laundry list of concerns and you could call them excuses. Some people would say they're legit concerns. Some people would just say they're excuses. It depends on which perception you're coming from, right? Which polarity you're coming from. Now, if you were Ripple and you wanted to take some banks from SWIFT, this is an opportunity, is it not? Is it not? Ripple has technology where anything that you need to come into alignment with, they can program that into the system. It can be done by smart contracts. It can be done by AI, and maintenance of that alignment can be done by smart contracts or AI, right? SWIFT does not have that capability that I know of as of now. So, and they can't undercut Ripple either. Ripple can undercut SWIFT when it comes to pricing, whatever pricing it might be, whether it's the pricing for the actual services or technology, whatever it may be. There's no way SWIFT as an established company is going to beat Ripple. No way. While Ripple can make some very delicious deals while still, causing that price of XRP to skyrocket while still making a good amount of value, in my humble opinion. That's how I look at it as an outsider. They can do everything SWIFT can. that could result, right? If Swift is coming off as the boss who's barking at you, they're scalding you, they're making things difficult, and they don't want to help. They're saying you come into alignment with this technology. Well, for Swift, they were threatening the banks and the financial institutions over their implementation, or whatever you want to call it, with ISO. That's what they did. That's what they were talking about. Okay, from their aspect, they're not helping them. They're just saying, "Hey, go do this now. Make it happen." Isn't that the way the legacy system typically works? And once again, there has been consistent complaining from those same institutions. So what makes anyone think that they can just, not that they can't, but that they're going to just bend the knee? What if they don't? What if maybe now they look at something like Ripple? Maybe they've been waiting this entire time. Why didn't they do that this entire time? Huh? Why? Maybe they were waiting on the DLT systems to come out that can offer them everything. You don't have to train your people, not extensively. You don't. It's not going to cost you extra money because now you have to have these training services for the new tech. No, because they're oversimplifying things. 1, 2, the tech comes with everything that you need. So yeah, you need to be in alignment with this or that. It allows you to do that automatically. 2, so why would you not wait on that? You see, but Swift in not wanting to compete, in my humble opinion, this is my humble opinion, folks, Swift in not knowing they can't compete, number 1. 2, not wanting to compete because they know that they can't. They just want you to bend the knee as quick as possible so they can keep you under their control, their thumb, which I get it. I understand. But that might be a mistake. It might be a mistake. Things are about to get very interesting. I'm telling you. Now, why is that important? Let's go here. Okay. Let me give you some real potent information. If you made it this far. So all of that is important because then we come to this. Now, here's a little bit of information for you. I just typed in on Google how many banks are currently in the are currently in the U.S. And that's important because it fluctuates. Some banks close down. You never know. You never know what's going to happen. We can't keep up with all of them. Right now, this is what it says. As of the end of 2023, there were 4,470 FDIC insured commercial banks in the U.S. A slight increase from the previous year. Okay, so 4,000. This is just the U.S. 4,470. How many of these banks do you believe Ripple can take? They're not going to take just a small amount. That's not how this works, folks. And most of these banks need the new technology. They need it fast. They need to thrive. They don't want to be left behind. How many of these banks? There's a lot of these banks that the Bankcoin companies can't take. How fast they can do it, I don't know. I'm not part of their companies. But wait, so keep that number in mind. 4,470 FDIC commercial banks. All right. That's one piece of important information. Then we go here. That leads me here because I want to know about value, right? How much value can we take? You know, once you start estimating how much you think how many banks you think they can take, then you can start looking into their financials. And seeing how much value could flow through these chains. Why is that important? Because I don't know about you, but I'm here for that bank money. So that's what can make the price of these bank coins explode like nothing else. Except for maybe if RWA happens the way that everyone's estimating it to happen, the RWA after interbank payments, in my humble opinion, it goes like this for me. Cross-border payments, massive explosion. B2B, I'm putting B2B and everything all together. Massive explosion. Then interbank payments, even bigger explosion. RWA, the last and final massive beyond belief explosion. That's 3 right there. Okay. That's how I'm looking at it. There will be other explosions, but I'm talking about the ones that are absolutely life-changing, not financial advice, just my humble opinion. This is how I'm looking at it. So then we get to these numbers here. So I asked Google, how much value did U.S. banks move total in the year 2024? So let's see. I'm going to put my hand up here so I know where to put this data. just in case, I don't put it at the beginning of the video. So in the ACH network, according to Nacha, the ACH network saw significant volume and value in 2024. The total value of ACH network payments reached $86.2 trillion. Whoa. Wait. Same day, right? One day. Same day, ACH payments totaled $3.2 trillion. $3.2 trillion. People don't understand. They're not seeing it. They don't know what they hold. Not really. They know a little bit. They don't really know. This is not a game. This is the big time. It says no way around it. There's no way around it. Wait. Derivatives transactions. The Office Comptroller Currency reports on derivative transactions, which represent a substantial movement of financial value. Derivative notional amounts reached $186.5 trillion in the fourth quarter. Folks, they're underestimating, and I think there's a concerted effort. Sorry about that. Let me try not to get loud. I'm just getting a little excited. I'm in my office. And this room is huge, so I usually project my voice. That's why sometimes I sound like this, and then sometimes if I talk low, like if we were in personal, I sound like this, which is crazy when I talk regular and I talk low like this. I get comments where people are like, "Mick, you okay? What's wrong with you?" I'm like, I'm just not projecting. I don't know why. In this room, it's like I just feel like it's so, because there's an echo, you can't hear it. This microphone has like what do you call that? There's like this knob on the bottom, and it doesn't allow outside sounds majorly to be picked up. But anyway, so you can't hear the echo, but there's like an echo, so I project my voice more. It tends to make me get a little bit loud. There's an explanation for that. Let's get back to the money. I like to make things clear, so especially if it's in my mind and I've seen people comment on it. Anyway, in the fourth quarter alone, folks, my little talking about the little stuff I just did gave you enough time to let that marinate. Derivative notional amounts reached $186.5 trillion in the fourth quarter alone in 2024. Let's move on to some more numbers. You think that's it? No, it's not. Welcome to the big time. And finally, where we're unleashed. We just have a few more steps to go. There's a few more, yes. It's not completely unleashed, but the door is creaking open wider and wider each week. S&P Global Market Intelligence data indicates that the total assets, this is bank assets, okay, that everything's going to be tokenized. Everything's going to move across these chains. There's no way that these Bitcoin companies who were the first, Ripple was the first I heard, talk about real world asset tokenization in a serious way. They were the first. Then if you remember them, BlackRock came even after them. Even BlackRock came after them. And Ripple talked about it. They spoke about it a few times powerfully. Then they got quiet and got to work. No way you leave that off the table. So yes, they're going to be involved, in my humble opinion. S&P Global Market Intelligence data indicates that total assets for U.S. commercial banks, savings banks, and savings and loans associations were $24.098 trillion. That's what I'm here for. Things like this. The trillions upon trillions upon trillions that get you so close to a guarantee that if they take a piece of this, that those prices of those protocol will explode so far out of this world, they'll just be quiet. They won't know what to say. They won't. You don't have to believe that. You don't have to agree. This is what's coming from my mind. I'm giving it to you pure and raw. 24 trillion. How many trillions? Okay, you think that's it? You do think that's it? You would be wrong. Bank deposits. Oh man, people are not understanding. Remember the banks talking about what was that called? The digital wallets. There's a reason for everything. They didn't do this for no reason. In 2024, they kept talking about digital wallets. The banks, they kept talking about how they could go about offering digital wallets. Now, why do you think that is? First of all, let's be 100% serious here. The digital wallets, hot wallets offered by the banks, cold wallets offered by the banks, which mostly what they're going to do, especially big money people, they'll love the idea of having their own quote unquote safe. And that's what cold wallets are. Air gapped cold wallets. And that's what they start talking about as well. It was like towards the end of 2023, beginning of 2024. And I caught that quickly. The only reason you're going to talk about air gapped cold wallets is because of big money clients. That's who's going to want that. There's a reason I say that. We'll get into that another time. But I'm pretty sure you understand. I'm pretty sure. It saves them money. Digital wallets is going to save them a lot of money. What have they been complaining about? Even the biggest banks recently, what did they complain about? Bank of America, if those articles were accurate, they said, hey, listen, if your accounts aren't active, we're going to close your accounts now. What? For what amounts? You got to clarify that. I didn't see any clarification on that. What do you mean? So if someone puts their 300,000 in there, just letting it sit because they're a humble guy, doesn't spend money a lot because they don't need to. They're, on a certain path of where only wisdom matters in their life. They put their 300,000 in there and just let it sit. So if it's inactive, you're going to close that account. First of all, there's no way I would think that logically a bank is going to say something like that and without there being something else to it that maybe wasn't reported, because I get it, Bank of America, how article writers may like to sensationalize things. It gets the adrenaline flowing of the reader. It gets more clicks. It probably would get shared more. So they might leave some things out. I get it. The only thing I could think of is that at some point, if you do take that stance, it's only because you will have these particular wallets. Well, of course, you will have to issue massive checks. You will have to have the people come in and remove that money, transfer it to another bank, etc. But I think, and I could be wrong, that at some point in the future, you will offer the people to save yourself cost. And you've been closing a lot of branches just like everyone else, right? Right. But to keep the people's business without upsetting them, you will probably offer them either a hot wallet. Yeah, you'll probably offer them a hot wallet. Although I err on the side of caution of the hot wallets being pushed majorly, although you probably will, because of the Zelle problems. So there's a lot of standoffishness with anything that looks electronic, even if the people don't understand the difference between the electronic system and digital, that those two different nomenclatures, they don't understand that. They see Zelle and something goes wrong with their Zelle and they just paint everything with a broad brush. Everything is electronic. Everything is Zelle. And so if you're giving me this hot wallet, what happens if that gets in trouble? So I think it's going to be cold wallets. I do. Physical something in your hand that keeps your customers with the bank. You're real slick, see, but you don't get it past me. No, you don't. We're on the case, right? And it's a bunch of us. Right? It's a bunch of us. We're on the case. But I just speak for myself. I'm on you. Something physical in your hand, it comforts the customer. They keep that. It's still on your chain. Right. They still have to use the QR code. The value still goes through you. You still maintain relationship with that customer, but it gives them security. That's just a few thoughts. So anyway, bank deposits. The U.S. banking system holds $17.7 trillion in total deposits. A lot of that's going to go into hot wallets and cold wallets. I don't know how many years it's going to take. Mark my words. The banks want to take over crypto. They don't want to dabble in crypto. It's not just about value. A lot of people are seeing the tree and they're not seeing the forest. So for us, the value is like, oh yes, I'm making a lot of value. And I could buy this Lambo and this mansion. But that's not how the banks think. The banks want that technology. They're going to make a lot of value also. The governments, the banks, the large asset managers, large companies, sure. They want that technology. They need it. Like I said, that's one of the things that's going to skyrocket that price that I'm looking at as a major, major catalyst. This right here, this 17.7 trillion in deposits is something that you need to keep an eye on. Another thing, FDIC, as if the FDIC is saying and unleashing them saying, hey, listen, you can play with crypto. FDIC has its own problems with funding or insuring deposits. They only have a limited amount. They ran out of it. And when those banks collapsed, I believe it was in 2023. Remember that? They ran out of it. The government had to go in, retool some things, and come up with a new program, which was pretty much just a bailout program. That's what it was. But they renamed it, but allowed the banks to continuously be withdrawing money. That's why the banks didn't collapse, folks. It was rigged. They rigged it so the banks wouldn't collapse. They teetered on the brink on life support. That's my life support, right? But kept borrowing money to keep themselves from going over to the other side, to collapsing. They rigged it. Let's see what happens now. Things have changed. Let's see what happens the next year or two. Did they borrow enough to keep them afloat in this new environment? We're going to see. All right, let me get to a little bit of Bitcoin news. Don't worry, Bitcoin people, I got you. I have you. I've got your backs. Don't worry, I got it. Listen, I think we're going to see a scramble. I do. There's no way anyone who needs capital, and I'm talking about these big countries, entities, they've been doing terribly. There's no way they're going to get left out of the biggest, one of the biggest explosions in value history. No way. Bitcoin adoption in the EU is limited by fragmented regulations. This is coming from certain analysts. But of course, if they're going to say this, they're coming with factual information. Corporate Bitcoin adoption. Look at that. Look at what they're saying. Corporate Bitcoin adoption, which means they're on the outskirts. They're not in majorly or at all. Who knows? Remains limited. That means there's a lot of value that can come into Bitcoin later. It's not even going to be taken into account, or it's not even going to be in the pile as Bitcoin takes off because they're out. They have to remedy this fragmentation first. That's a huge catalyst. So then the question becomes, in my mind, how many of these corporations in Europe specifically are not in Bitcoin yet, right? If you can get a number on that, a percentage on that, then we can start looking at figures, looking at numbers. All right. And that should tell a huge, important story. It says, because of Europe's, quote, fragmented, unquote, regulatory regime and a smaller liquidity pool than the United States. That's funny. You can't throw me off with that. You cannot throw me off with that. Europe has a lot of value. Oh, yeah. A lot of value. My apology. I have to go get some, I lost my chapstick. My lips are super dry. Hey, I'm just being real. Institutional adoption of Bitcoin in the European Union remains sluggish, even as the United States moves forward with landmark cryptocurrency regulations that seek to establish Bitcoin as a national reserve asset. I hate that there's this like tie up between Europe and the US. Like US does something and everyone's like, what's Europe going to do? I don't understand that. I can't be like that, folks. I can't. I'm me. You want to know why I do something and someone just come to me and say, Mick, why'd you do that? I'm going to explain it to you clearly. Like, this is why. If I have the respect for you, I'm going to say, this is why I do this. But I made my own decision. I don't like this following in others' footsteps and shadows. But, it seems like Europe has been sort of trying to break out of that as of recent. But now it's like, okay, well, what are you going to do? You have to make some decisions and make some moves. What are you going to do on your own? Because this is going to be very injurious to their people. If they sit out this next Bitcoin explosion. Those corporations in Europe need it. Facts. One, the countries in Europe need it. They need that value also. But let's read a little bit more here. The stagnation, it says, may stem from, oh man, we went too long in this video. Whoa. The stagnation may stem from Europe's complex regulatory regime, according to Elisenda Fabrega, General Counsel at Bricken, a European real-world asset tokenization platform. So we're going to keep our eyes on this. We'll see what happens with Europe, but they can't be left behind. There's no way. They can't be left behind. And I think there's going to be a few different places where you're going to see a scramble, and that's going to cause at some point in the future Bitcoin's price to pop even more because they're all going to have to just pile in. So now that you have the information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.